A very good evening, my dear friends. Welcome to our Patron Live sharing class. Once again, it's my pleasure to be able to share with everyone here again. I hope everyone in my class are able to gain knowledge from my sharing and able to fully understand the materials I prepared for everyone. Please also take some time to read up again if you all have any doubts, and also put the materials you have learned in my class into practice. As I always believe, practice makes perfect. Financial freedom is our ultimate goal. So let's work hard together to achieve it. As for today, I will continue to share something new with everyone. Today's content will be very important for everyone. It's a new technique. This technique is able to help everyone to have a clear understanding about the stock market. Besides sharing trading techniques, I will also continue to scan for more profitable, high quality stocks, share market analysis, and guide everyone to a better future. Thank you once again for everyone's support. Okay, let's take a look at today's contents. Okay, today we'll be covering these 5 topics, and let's move on to the market analysis. Okay, friends, the year 2023 is coming to an end, and the stock trading for 2023 has concluded. The stock market performed in 2023 should be still fresh in everyone's memory. It was a strong year, okay, for the India stock market. Despite experiencing 2 declines at the beginning and the middle of the year, it did not affect its bullish market structure. The year ended with a strong closing, with the Nifty 50 index and the Sensex index both recording a remarkable 20% increase, which is quite rare globally. So, in 2024, the Indian economy is expected to continue to stand out, especially against the backdrop of challenges faced by other major economies. We believe that India will maintain a strong growth momentum in the coming year, which will continue to drive a significant bull run in the India market. This is also why global investors are keen and optimistic about India market. It is also a good news, I would say a very good news for everyone. And it will also help us to make more money in the coming year, which is 2024. So, let's grab hold of this opportunity and make more money in 2024. Okay, let's take a look at the Nifty weekly chart. So, for our stock trading, the stock trading for 2023 has already ended, and 2024 is about to begin. Therefore, today we are not looking at the daily chart. The stock market closes on Friday, marking the end of the weekly and monthly and yearly levels. Next, let's take a look at the weekly and the money trend together. Okay, from the weekly chart, we can see the current upward trend is very strong. Since the end of October, there have been like 9 consecutive weeks of continuous growth. Although there is a candlestick with a downward trend, the price center of this candlestick is moving upwards. So we can say that it has been a 9 continuous rise for 9 weeks. At the weekly level, we can clearly see 2 points. First, the current upward momentum is very smooth. Okay, with the MA5 steadily supporting the price increase. Moreover, for 4 consecutive weeks, the price has not touched the MA5 moving average. We should remember the rule about MA5, which is commonly used to judge the strength of the prices in a certain time period. In the current situation, it clearly indicates the strength of the prices, which will continue. Secondly, we notice the MACD indicator, which has undergone a bullish crossover, which is over here. Okay, crossover above the zero axis. Furthermore, the distance between the fast line and slow line is increasing, indicating a widened gap. Okay, the gap you can see here. These 2 lines are widening up, which is also a characteristic of the price of strength. Therefore, at least at the weekly level, prices are expected to continue to rise. As I mentioned earlier, we should not consider where the top of the rise is as for now. Okay, let's take a look at the monthly chart for Nifty. Okay, this is a Nifty monthly chart. From the monthly chart, we can better see the bullish characteristic of the index. Let's take a closer look. 1. Firstly, we observe the monthly candlestick chart. I noticed that the increase in this month has far exceeded of the previous month. Okay, this is monthly. Okay, you can see this and this. You see the size of the candlestick. Okay, this month has increased a total of 7.94%, while the previous month increased by 5.52%. It is evidence that we are entering a phase of accelerated growth. When we see this kind of candlestick pattern, we can usually predict that there is a high probability of an increase for next month. Okay, for point number 2, there's another point to take note, is that the trading volume of this month has increased compared to the previous month, which is this too. Okay, you can see the block. An increase in trading volume only represents more funds entering the market. With more funds entering the market, what will be the price? What will happen to the price? Do you guys still remember what I shared with you all regarding of more funds entering the market? It means that it will be easier to drive prices higher. Give me a minute. Sorry, give me a minute, huh? Okay, I think I have some noise at the background. Give me a minute, let me adjust. Okay, guys, let me give me a minute, huh? Okay, I'm sorry for the noise at the background because I think due to some technical issues. Okay, let me continue. Sorry about that. Okay, it means back to the price. Okay, with more funds in the market, what does that mean? It means that it will be easier to drive the price higher. Okay, this pattern has increasing prices and volume is a classic volume analysis technique representing a relatively healthy upward trend. Okay, for point number 3, then let's take a look at the MACD indicator. The fast and slow line shows no signs of bearish crossover, but instead they are diverging upwards again. This indicates that the price trend is further strengthening. With various technical indicators, it suggests that the market will continue to rise after the start of 2024. Looking at the macroeconomic fundamentals, India's economy is expected to maintain rapid growth in 2024. And foreign capital is increasing optimistic about the Indian market, which will bring a greater investment boom. All these factors are likely to drive the stock market further upwards. Okay, let's move on to the Sensex weekly chart. As for the Sensex weekly chart, the chart shows a smooth upwards trend, and it has formed two upward trend lines since the low point in June. This upward trend line will support the price increase at a larger time level. The index is also supported by the weekly MA5 in its upward movement. We can also notice that the recent weeks have maintained a very smooth upward trend in the MA5. In general, this kind of upward trend has a very strong upward momentum, and the market can continue to rise for a period of time or a magnitude even without any positive news to simulate. At the same time, I also noticed that the fast and slow lines of the MACD indicator are diverging, indicating a strong phase in the price. Currently, both the candlestick chart and various trend indicators shows bullish market process in the stock market. As for the monthly chart of the Sensex index, I will not go into details with explanations because it is actually quite similar to the Nifty index of the monthly chart. The market upward trend remains strong, and our recent profits have been even better. As for the usage of the asset management accounts that was used for trading the UC limit stocks has also yield good profits. The total profit rate has now reached as high as 60%, and we are likely to continue to have more profits tomorrow. These profits are just a way of that Petron Ventures to give back to everyone for trusting and supporting us. As for the profit, everyone is free to withdraw it, and as for the interest-free funds, it will be retrieved by tomorrow. Okay, we will retrieve it back by tomorrow. If you have any questions, please consult my assistants. Okay, let's move on to the next topic, which is macro analysis. Okay, we'll continue to focus on macro analysis of data and news. I have already shared with everyone the importance of reading up and paying attention to the news and data for investors. So I will not explain in details again, okay, why you need to read news. Just remember that it is as important as learning the techniques. Okay, the differences lies in how investors interpret the news or the data. The same data or news, okay, that everyone reads may interpret differently by different people. Okay, maybe the way you read it and the way I read it, we read the same news, but sometimes I interpret it in a different way. You get what I mean? So, whether it's right or wrong can only be measured by the actual market trend. Okay, so how can we improve our accurate interpret of the news? The only way is continuous learning and accumulate more experience. Then we can improve our comprehensive judgment ability. Okay, all my judgments are not like accumulate within few months. It's years of experience and years of reading. That is why I am here now. Okay, so let's take a look at the news, okay, that I have prepared and wanted to share with everyone. Okay, hold on for a while. Let's start off with the first news. Many market industries observers have indicated that due to the continued strong interest from foreign investors, it is expected that there will be a large amount of buying in the stock and bond markets. And the bull market in India financial market may continue in 2024. India's inclusion in the JP Morgan Emerging Markets Bonds Index will boost government debt investment, while attractive valuation will continue to attract funds into the stock market. As of 28 December, overseas investors have net purchased 20.7 billion worth of Indian stocks in 2023, the highest level since 2020, and their net debt purchase amount to 8 billion. In fact, the inflow of a foreign capital, whether into the stock market or the bond market, indicates the increasingly attractiveness of India market globally. The influx of foreign capital, even into the real economy, will also strongly drive the stock market upwards. Why is this so? Because the stock market is an indicator of the real economy. With the development of the real economy and further increase in corporate profits, it can also drive the stock market upwards. Ultimately, capital is most direct force driving the stock market upwards. Since foreign capital has further increased its investment in the India stock market, the bull market is the financial market will continue. To be honest, I am not only optimistic about the stock market in 2024, but I also have a long-term positive perspective on the India market. I hope that more friends can achieve their wealth dreams in this bullish market. We, Petron Ventures, will be here to lend a helping hand to everyone. And I also will be here to help everyone. The reason why we are doing our best to help everyone to achieve faster profits is that on one hand, it can quickly increase the market shares of Petron Ventures in India, and on the other hand, it is for the contest for the location of the Asia Pacific headquarters. With everyone's support, we have already secured the first place in the first stage of the headcount. For the next stage, which is the competition in asset management skill, which is really extremely important. Only by achieving faster profit through asset management accounts for everyone, then the asset management skill in the India region will corresponding increase. Okay, let's move on. Since we have already mentioned the data of net inflow of a foreign capital, so let's take a look at one of the data. FII, okay, refers to foreign institutional investors. It can be said that after revising the trend of continuous selling in November, the increase in December has risen significantly. Okay? After the Federal Reserve hinted at the end of its tightening cycle and rises expectation of a rate cut in March 2024, global funds inflow intensively this month. This led to a sharp drop in US bonds yields and triggers foreign capital inflow into emerging markets such as India. From this chart, it can be seen that as the end of December, okay, which is until the 29th, okay, you can see the date here, which is 29. FII net inflow of funds was 31.95978 billion rupees, okay, which such a large amount of foreign capital inflow how can the stock market not rise? If foreign investors did not have the confidence in the Indian market, how would it, you just imagine, how would they dare or have the guts to invest in such a large scale? And of course, we, Petron Ventures, also belongs under the FII. Okay? Whether it's the investors or individual investors, everyone share one same goal. The goal is to make money and more money. Okay? With such a large scale investment by foreign institutional, what do we individual investors have to worry about? They are the big boys. They are coming in. Right? So we also will earn. Okay? The only thing that we have to do is to seize the opportunity in this bull market to earn more profit and achieve our wealth goals. When the opportunity comes, if you don't seize this opportunity, do you guys think it will be a waste? Alright, let's not talk too much about, okay, as for how to seize this opportunity. Everyone has their own thoughts and their own judgment. Okay, so this I will not touch any more on, and let's continue for the next news. Okay, let's now focus on the relevant data of the US stock. As of the week ending on the 27th December, a large number of funds flow into the US stocks, with data showing a further cooling of inflation in November, boosting the expectations of an early rate cut by the Federal Reserve. LSEG data shows that investors bought a net value of 14.57 billion in US stock funds for this week, marking the largest single week net purchase since 14 June. It's important to note that stock funds always need to buy stocks, right? And these purchases, whether now or is in the future, will become one of the driving force for the stock market's rise. Some friends may find it strange. Why should we care about the US stock or US market? This is because the US financial market is the world's largest. They are number one now. Okay? And its every move often becomes a barometer for global stock markets. Just like an example of the Federal Reserve will cut interest rate, the current optimistic speculation about an early rate cut by the Federal Reserve alone has already become a driving force for the market rise. The Indian stock market will also benefit from this, as the recent market trend have already been shared with everyone. So I will not touch more on it. Okay, that's all for this news sharing. Next, let's move on to the classical tactics. Okay, for today, classical tactics will be touching on Dow theory. Okay, so I will continue to share with everyone an important technical course. Okay, well, I'll take it as a course. As some of you may have noticed, what I'm going to share with everyone today is Dow theory. Why are we specifically bringing out the content related to Dow theory today? Because Dow theory is truly important. Okay, on one hand, it is the foundation of all technical analysis theories and can be said to be the origin of all technical analysis schools. On the other hand, phrases like the trend is your friend, follow the trend, and the trend is king. I believe some of you guys have heard similar phrases before that we often mention in our practical trading. All reflects the importance of the trend. And Dow theory precisely standardize this very important concept. Okay, let's move on with the Dow theory. Foundation of all technical analysis theories. Okay, some friends may have studied Dow theories before, while others might not have. Okay, regardless of whether you guys have studied or not, I hope everyone can give me your attention and listen carefully. As I mentioned earlier, Dow theory is the foundation of all technical analysis. After learning Dow theory, everyone can handle technical analysis with ease. Okay, I need to inform everyone that because Dow theory has a lot of contents, and we might not able to cover everything by tonight. But no worries on that. Okay, I will continue on my next few lessons, and we will touch on bit by bit. Let's start off with few points. What is Dow theory? What are the three major assumptions of Dow theory? What are the 5 major principles of Dow theory? What are the Dow theory greatest contributions to technical analysis? What is the guidance and specific applications of Dow theory for trading? Okay. And what are the precautions when applying to Dow theory? Meaning things to take note when using it. Okay. So all these specific contents will be shared with everyone during tonight and my future live classes. Okay, let's move on into the specific details. What is Dow theory? Okay, let's take a look at what is Dow theory. Okay, let me share the history of Dow theory first. Okay, generally, Dow theory is considered the foundation of a technical analysis. It represents the general volatility of the market and is widely applied to any market with technical charts, including but not limited to the stock market. Dow theory consists of 3 major assumptions and 5 basic principles. Okay, Dow theory is based on the work of Charles Dow, okay, which is this guy. Dow was the founder and editor of the Wall Street Journal and also a co-founder of Dow Jones and Company. During the tenure at the company, he actively created the first stock index known as Dow Jones Transportation Average, which is DJT, followed by Dow Jones Industrial Average, which is DJI. Okay? Dow theory is a progenitor of the market technical research. But interestingly, the initial originated from the editorial of Charles Henry Dow, a news reporter, the first journalist of the Wall Street Journal, and also the co-founder of Dow Jones and Company. After his death, it was summarized by Williams P. Hamilton, Charles Rea, and E. George Shriver. Charles Jones himself never used the term Dow theory. Okay, this is about a bit of history for you guys to understand. Okay, let's move on. Okay, next, let's take a look at what are the three major assumptions of Dow theory. Number one, price reflects everything, and the market is always right. This means that whether it's good news or bad news, the market prices have already reflected all factors. The market is always right, and we can only profit more by following it and adhering to the market. Okay, for point number two, once a trend is established, it will continue. This means that once a price change forms a trend due to the inherent force or inherity of the market itself, it will continue to move in the direction of the trend. This brings certainty of profit to investors' trades. For example, if there is currently an upward trend, it is likely to immediately change direction. As long as we buy the stock expediently within the upward trend. Making money is highly profitable. For point number three, history will repeat itself. If history does not repeat itself, then all our technical analysis will lose its meaning. At the same time, events of the same nature will still have the same impact on the market. I'll give you an example. In the history of every interest rate cut cycle by the FED, it has always had a positive driving effect on the market. Therefore, we have a reason to believe that when FED cuts rates the next time, it will also drive the market upwards. The specific performance of the market may be different, but the nature is still the same. The content I share today focus on theoretical aspects. I want to make it clear to everyone that the reason why Dow theory can stand the test of time in the market and is zealously sought after by majority of investors is because it is important to us. If these fundamental theoretical aspects are not solidly learned, no matter how many technical methods you learn, it may just be a castle of air, meaning nothing. Okay? Next, let's take a closer look at the first assumption of the three. Price reflects everything, and the market is always right. The Dow theory is applicable to the efficient market hypothesis. Market behavior refers to the buying and selling activities in the market. Characteristic as a collective behavior. Market behavior encompass and digest everything. It reflects every piece of information, every individual with market knowledge. All their hope and disappointment and knowledge are reflected in the fluctuation of market behavior, including their predictions. For this reason, market behavior will always anticipate and influence future events. The main idea behind the market behavior and digesting everything is the belief that every factors influence prices is reflected in the market, without the need of excessively focus on specific factors affecting prices. It is important to trust the market is always right. Not to be obsessed over a particular factors of interest, as getting deeper into it will not change the market according to your wishes. What we need to do is follow the market. Okay? Okay, let's take a look at the second assumption. Once a trend is established, it will continue. We all know that market behavior is a collectively behavior, and some events may seem incredible to all of you, but it's just like you're driving a car. Even if you step on the brake, the car will continue to move forward. Am I right? The concept of trend is at the core of a technical analysis. The so-called trend is actually a pattern. The main idea is that the price changes follow a certain patterns, with prices having the interior to continue moving in the original direction from the evolution of the market behavior in a trending manner. It can be naturally inferior that for an established trend, the next step is often to continue evolving in the direction of existing trend, with much less probability of a reversal. It is important to remind everyone that in the market, many investors always want to buy at the lowest point and sell at the highest point. I have said this many times. This is not possible because you cannot predict the lowest and the highest point. But what you think is the lowest point often to turn out to be halfway up the mountain. As for you think of the highest point, often means you sold the stock too early. Even we can sell or buy at the lowest or highest point, I would say that it's only pure luck. And we are not always that lucky. Okay. Let's move on the third point. The third assumption, history repeats itself. There is a saying that there is nothing new on Wall Street. History always shows remarkable similarity. If certain conditions that occur in the past still exist now, then the possibility of similar events happening remains high. This is considered from the perspective of human psychological factors. Just like the example we mentioned earlier, which I shared with everyone, every time the Federal Reserve cuts rates, cuts the interest rates, it will push the market up. So, do we have a reason to believe that when FED cuts interest rate for the next time, it will also push the market up? In fact, as everyone has seen, the market has performed very well recently, simply because of the market expectation of a FED rate cut. So, when conducting the technical analysis, once encountering a situation similar to a past period, it should be compared with the past results. The past results are known, it's because it has happened in the past. And these known results should be used as a reference for predicting the future. Alright? However, market behavior is constantly changing, and it is impossible for exactly the same situation to repeat itself, as differences always exist to some extent. Nothing can be exactly the same. So there might be some differences in it. Because of this experience of the extent, the study of some technical patterns becomes more meaningful, such as the study of the candlestick patterns, the reversal patterns, and so on and so forth. In the upcoming time, we will continue to track and analyze the stocks recommended to everyone. Due to today's time constraint, we will temporarily stop here with the content about Dow theory today. In the next few live classes, I will continue to share more with everyone. So let's move on to the next topic. Profit statistics. Let's take a look. Since last Wednesday, everyone using interest-free funds for trading has generated a cumulative returns of over 60%. There is a high probability of profit for tomorrow. I believe such a return on funds is almost uncommon in the market, and is our genuine way to give back to everyone. As for the interest-free trading period is ending, and the company will reclaim the funds tomorrow. As for the profits, everyone can withdraw anytime after tomorrow. Our ability to lead everyone in trading the UC limits for quick profits, it actually fully demonstrated the advantages of using Pantron Ventures asset management account, which are not available with regular accounts. Many friends have already made substantial profit from trading stocks with UC limits, which is exactly what we wanted or hoped for. Only when everyone makes money, then Pantron Ventures can further expand its market influence. And it will also benefit our contest in the market value in the activity of Asia Pacific region headquarters. Of course, the slots for trading these stocks with UC limits are not unlimited. Okay, currently we have a really large number of members and friends. Okay, and the stocks for UC limits may not be enough for everyone to participate. Okay, because slots are limited. Okay, are limited. In other words, some friends may not be able to participate in these trades. I myself, okay, I will do everything in my power to apply for more slots for everyone. And I am even negotiating with relevant institutions for new strategic trades. Ultimately, aiming to help everyone to make even more profits. Okay, so once again, as a reminder to everyone, that the company will reclaim, okay, we will reclaim the interest-free funds tomorrow, and everyone is free to withdraw their profits. Okay. Okay, let's move on to stock analyst. Okay. As for the stocks that was recommended to everyone, okay, me myself will continue to track them and analyze them. Regardless of the price movement, whether it's up or down, we will continue to monitor the stocks. Since entering the Indian market, Pentron Ventures has always been committed to all our members and serving everyone with a sense of responsibility. I will track all recommended stocks until the end, okay, with my team. Therefore, we have gained the trust and support of every members and friends, and I'd like to say thank you, okay, once again for trusting us and support us. Okay, let's move on to our stocks that we are holding. Okay, first we'll talk about Saregama. Okay, of course, Saregama is the most famous audio entertainment company in India. Okay, subcontinents. Okay, it always has been a very good company. Okay, so today let's take a look at the weekly analysis of this stock. In fact, this stock has already shown a bottom signal at the end of November. As you can see, the area that I marked, okay, which I marked over here. Okay, this type of candlestick pattern is usually a clear bottom signal, especially when it occurs at a relatively low price. I can share with everyone later on how to identify this type of bottom, okay, the bottom signal. But let's take a look at the stock itself. So on one hand, the bottom signal has come out early, and at the same time, we should also see that the bottom has already broken from the previous downline trend, and is currently in a new upward trend. Okay, the current issue of this stock has not shown a strong upward trend. Okay, it's not strong enough yet. The current price is near our recommended price, okay, that I recommended to everyone, which means we do not have much losses on this stock. Okay, no losses at all at the moment. So for the moment, we don't have any losses, but there is simply no large profit margin. So, friends, don't worry about this stock or don't panic. Okay, good stocks will have the chance to go up. So please give some time, okay, for it to go up. As for this stock, my personal recommendation is to continue to hold and plan to exit when the stock shows a margin of profit. Okay. Okay, let's move on to the next stock, which is Adani. Okay, for Adani, this is the weekly chart. Okay, it's also a leading trading company engaged in trading power, coal, agriculture products, and also now they are involved with manufacturing of solar modules and batteries. Okay, in fact, this company, the major shareholders, not only including the founders, but also have entities like Goldman Sachs and India Life Insurance Company. So this is also a good company. In terms of technical analysis, the stock exhibits a standard breakout pattern. Evidence in both the daily and the weekly chart. A key point here is that despite the recent rapid price increase, it has not fallen below the support line, which is positive technical signal. Okay. Some minor fluctuation. Okay, for this stock, I will say that please rest assured and continue to hold it. We will notify everyone at the nearest opportunity if we need to sell this stock. Okay, let's move on to the next one. Will be Kota Bank. Okay, for Kota Bank, it has been seen that the stock has rise for 5 consecutive weeks up to last Friday. Although there was a slight fall on Friday, but it does not affect the upward trend. At the weekly level, the price has been rising for 3 consecutive weeks after breaking through the previous high. And there's no adjustment, okay, indicating that the stock is still very strong. Okay, technically speaking, continue to hold. No need to worry about this stock. Okay, let the stock gradually increase our profits. Okay, if need to sell, we will inform everyone at the earliest opportunity. Okay, Star Health. Okay, for Star Health, the bottom oscillation is indicating a potential delay of uptrend. Okay, you can see over here. However, it's confirmed that there is strong support at a lower level. So, its limited downside potential is given at the current price. It will not go anywhere lower. Okay. Currently, there's no negative news about the company. Therefore, the adjustment of the price will not have any big major issues. Okay, for this stock, I sincerely apologize. Okay, however, I rest assured the stock is far being difficult to handle. Even if there is some losses in this stock, I vouch that I will guide everyone to earn more profits for the future stocks. Okay. Okay. As for the coming up of the UC limit, you have actually seen. Okay, I believe you all have seen and traded with me in the UC limits. So have faith in me. Okay, have trust in me. I will bring you to earn more profits. Okay, let's move on to the last stock of the day, which is Infosys. Okay, from the technical perspective of this trend, okay, it's an upward trend line is very clear. Currently undergoing a pullback confirmation process after a breakthrough. The 1,500 rupees level serve a significant price support zone. And the price drop below this level would indicate weakness. Otherwise, upward trend is likely to continue. Despite some negative news last week, the price did not experience a significant decline. While facing global uncertainties and micro headwinds, the strong domestic economic development are improved. Corporate profits and support for positive, okay, of a positive market sentiments. So as for now, hold on to the stock. If it falls below 1,500 rupees, then we may consider of selling the stock. Okay, anything we'll update and let everyone know. Okay, friends, today our live sharing will end here, and today marks the end of 2023, and in a few more hours, okay, it will be a new 2024. So I hereby wish everyone a happy new year and wish everyone to be able to obtain financial freedom as soon as possible. Okay? Thank you very much for all your support. We will continue our class on this coming Tuesday, which is 2nd January 2024, 8 p.m. I hope to see everyone here, and thanks once again for all your support, and good night. Jahi!